Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 14th, 2025, we are turning our attention to one of the most closely watched stocks, Apple, ticker symbol Apple. Before we dive into the intricate details of its price action, let's contextualize Apple's current standing with the latest news and industry developments. A major theme dominating headlines is Apple's aggressive push into artificial intelligence, with reports of a tabletop robot and advanced security cameras. The successful integration of Apple Intelligence features is seen as a significant growth catalyst, potentially triggering a hardware upgrade supercycle for the company. This aligns with bullish sentiment, as analysts maintain a moderate buy rating with an average 12-month price target around $236.93, suggesting a modest upside from recent levels. Furthermore, Apple's services segment continues to be a powerhouse, demonstrating robust double-digit growth and providing a stable, high-margin revenue stream. On the flip side, potential headwinds include slowing hardware growth, with some analysts predicting low single-digit revenue growth for FY25, reflecting reduced consumer spending. Regulatory scrutiny also poses a persistent challenge, with ongoing antitrust concerns in both the US and EU regarding App Store policies, as highlighted by a recent Australian ruling and Elon Musk's threats of legal action. Tariff pressures also loom, although a recent 90-day delay on a 150% China tariff offered temporary relief. Now, with this fundamental backdrop, let's pivot to the charts and see how these narratives are playing out in AAPL's price action. Looking at the daily chart for Apple, which covers data from April 2024 to today, August 14, 2025, we can observe distinct phases of movement. In April 2024, the stock consolidated around the $165 to $170 range before a significant breakout in early May, largely on strong earnings, propelling it past $180. This initial surge was followed by a period of consolidation in May and early June around the $185 to $190 mark. Then, in mid-June 2024, a powerful bullish run initiated, likely fueled by early AI buzz or WWDC developments, driving the price from roughly $193 to a high of over $220 in just a few days. This spike created a new resistance zone around $215 to $220, which the price struggled to maintain, leading to a pullback to the low $200s by early July. A strong rebound saw Apple test new highs around $234 in mid-July, but it failed to sustain this level, resulting in another sharp correction back towards the $200 to $205 support zone by late July and early August 2025. Notice the heavy volume on these large upward and downward swings, indicating strong institutional interest and battle between bulls and bears. Now, if we zoom into the most recent period, the first week of August 2025, we see a remarkable bullish reversal. From a low of around $202.92 on August 5th, the stock experienced 3 consecutive days of significant upward movement, with August 6th, 7th, and 8th showing substantial green candles and high volumes. This aggressive upward move, pushing Apple from the $202 support up to $229.35 in just a few days, directly correlates with the news about Apple's renewed AI focus and the anticipation of an AI-driven hardware supercycle. This suggests that the market is heavily discounting the regulatory headwinds and hardware slowdown concerns, instead buying into the AI narrative with considerable enthusiasm. The $202 to $205 area has proven to be a robust support level during several pullbacks over the past few months, reinforcing its significance. Conversely, immediate resistance has been established around the $230 to $235 zone, which acted as a ceiling in July 2024 and was approached again in February 2025. The stock is currently trading right at this critical $233.33 level, indicating a pivotal moment for Apple. Let's narrow our focus to the 15-minute chart, specifically looking at the price action from August 11th to August 13th, 2025, to better understand the short-term dynamics of this recent rally. Starting on August 11th, we can observe a dip in the morning session, with price briefly testing $224.76 before a strong rebound. This rebound initiated a consistent upward channel throughout the day, closing near $227.18. The next day, August 12th, the bullish momentum clearly continued. There was a strong upward gap and push in the early trading hours, from around $226 to over $228, followed by a slight consolidation. Later in the day, around 14:55 Universal Time Coordinated, another significant surge occurred, pushing the price from $228.79 to highs above $230, demonstrating sustained buying pressure. Finally, on August 13th, the upward trend persisted, with the price steadily climbing from the $229 to $230 range towards our current level of $233.33. The continuous higher lows and higher highs on this short-term chart are textbook signs of a strong uptrend, suggesting that the bullish sentiment from the AI news is firmly ingrained in current trading behavior. Transitioning to the 1-hour chart, covering the period from late July into early August 2025, we can clearly see the sharp decline that preceded the recent rally. Notice the hourly candles on July 31st and August 1st, where a rapid sell-off occurred. Specifically, on August 1st around 1300 hours Universal Time Coordinated, the stock saw a dramatic drop from roughly $211 to $207, then further down to $204 by 1400 hours Universal Time Coordinated. This swift decline aligned with the broader market concerns about hardware growth slowdowns and ongoing regulatory pressures that were being discussed in the news at the time. The subsequent strong rebound starting August 6th, as evident on the daily chart, quickly reversed this short-term bearishness, underscoring how swiftly market sentiment can shift in response to dominant news narratives like the AI supercycle. So, to summarize our analysis, Apple is currently at a critical juncture. The bullish case is primarily driven by Apple's strong commitment to AI and the thriving services segment, which could indeed lead to a new upgrade cycle and sustained high-margin revenue. The recent price action, particularly the strong push from $202 up to the current $233 area, reinforces this positive outlook, with market participants clearly buying into the AI story. However, the bearish arguments, centered around slowing hardware sales and persistent antitrust scrutiny, cannot be ignored. These factors have caused significant pullbacks in the past and remain a potential cap on unchecked upside. For the short term, if Apple can convincingly break above the $235 to $237 resistance zone, it has a high likelihood, approximately 70%, of challenging its previous all-time high of $260. This would be reinforced by continued positive news flow around AI product releases and strong institutional buying volume. Conversely, a failure to break above this resistance, perhaps due to negative regulatory news or disappointing hardware outlooks, could see the stock retreat. A clear break below the immediate support at $227 would indicate a higher likelihood, around 60%, of retesting the $220 level, and possibly even the strong $200 to $205 support zone if selling pressure intensifies. Long term, the outlook remains cautiously optimistic, but regulatory outcomes will be paramount. Easing pressures could unlock further gains, while stricter regulations could suppress growth. Keep an eye on Apple's upcoming Manufacturing Academy on August 19th, as any announcements there could provide further catalysts or insights. Also, watch for any updates on the iPhone 17 Pro's rumored all-aluminum chassis, as hardware innovation remains vital alongside software advancements. Finally, always monitor trading volume. Significant volume on breakout or breakdown attempts will confirm the strength of the move. Thank you for joining us on Explain the Charts. where we aim to demystify market movements.